The housing market just sent buyers a confusing signal. Most Americans are waiting for mortgage rates to drop before buying a home. But what if waiting ends up costing you more money than buying today? This week, we got several major economic reports that revealed something surprising about inflation, home prices, and where the housing market may actually be headed next. And if you're planning to buy a home in the next few years, this could affect one of the biggest financial decisions of your life. So let's break it down. The economy is sending mixed signals. This week brought a fresh look at inflation. The Fed's preferred inflation gauge, known as the Core PCE, rose 0.2% for the month. That sounds like good news, but zoom out, and inflation is still running at 3.3% annually. That's well above the Federal Reserve's target of 2%. And that's where the challenge begins, because the Fed is stuck between two competing problems. Inflation remains high, but the labor market is showing signs of slowing down. Continuing jobless claims have started creeping higher, suggesting some workers are taking longer to find new jobs. Now the big question becomes, does the Fed keep rates higher for longer? Or do they begin considering rate cuts later this year? And that's exactly what investors are trying to figure out right now. But here's what most people miss. Everyone focuses on mortgage rates. Almost nobody focuses on home prices. And that could be a costly mistake. Because while buyers have been sitting on the sidelines, waiting for lower rates, home values have continued to climb. New case-shiller data showed national home prices increased again. The FHFA index showed an even stronger annual gain. Even with higher mortgage rates, home prices are still rising. That's not what many experts predicted 2 years ago. Yet, here we are. The surprising part, new home sales actually fell 6.2% in April. So at first glance, that sounds like bad news, but the reasons matter. Affordability remains a major challenge. Higher rates and higher prices have squeezed many buyers. However, a slowdown in sales doesn't automatically mean prices fall. And that's the lesson the housing market keeps teaching us. Inventory remains limited in many markets. Homeowners with ultra-low mortgage rates still aren't eager to sell, and demand continues to outweigh supply in many areas. The number that should get your attention? Economists surveyed Fannie Mae and Pulsenomics are forecasting 14% cumulative home price growth over the next 5 years. Let's make that real. On a $600,000 home, that's roughly $84,000 in projected appreciation. Not from renovations, not from stockpiling, simply from owning the asset. Now, projections aren't guarantees, and nobody has a crystal ball. But it highlights something many buyers overlook. The cost of waiting isn't just about mortgage rates. It's also about potentially missing years of appreciation. If you're waiting for the perfect time to buy, you may be waiting forever. The perfect market, it rarely exists. There will always be headlines. There will always be uncertainty. There will always be reasons to wait. The buyers who tend to win long-term, they're not the ones who perfectly time the market. They're the ones who buy when they're financially ready and allow time to work in their favor. Because while mortgage rates can change, time in the market is often more powerful than trying to time the market. The biggest takeaways from this week isn't that inflation moved, or that GDP slowed, or that home sales dipped. It's that the housing market continues to reward long-term thinking. If you're considering buying, refinancing, or simply want to understand your options, I'd be happy to help. And if you want weekly updates that explain what the headlines actually mean for home buyers, make sure you subscribe. Because next week data could reveal even more about where mortgage rates and home prices are headed next.